Well, good morning everybody. Welcome to another YouTube Live. It is Thursday, 22nd of August. Welcome. Just give me a yes please guys if you can hear me, not see me, hear me, and see the screen, the Forex Factory calendar. Not too much in the markets today, one or two opportunities, but markets are very similar to what they were yesterday. Just a few extra candles, still in consolidation, not a great deal of movement. I've got a couple of yeses now, so we're good. Forex Factory calendar, first of all, for Thursday. There is no real news out for me to pay attention to. The only thing I would pay attention to is the New Zealand this evening at 11:45. Typically New Zealand news at that time of night will move the market, and because the market's thin, we typically see big spikes. So if you are in any lower time frame trades, maybe it's worth managing the trade during that time. Anthony, Peter, Marcus, Ryan, good morning to you. So nothing really on the Forex Factory calendar. This is obviously YouTube Live, and there is around a 10 to 15 second delay, and that means that if you do have a question or there is a trade setup that you want me to take a look at, post it in the chat, but it may be a few seconds before I get around to it. Other than that guys, I will crack on with the review. As mentioned, I really don't have that much to go through. A lot of the currency pairs are very similar to yesterday, not a great deal of movement. So if there is anything you'd like me to take a look at, yeah, please let me know. Other than that, I will bring over the Euro Aussie. This is something I am looking at, and it is a potential low and tight flag. So I've still got the workings out from last time, which is our big head and shoulders where we are looking at the market coming lower. Other than that, if we go out to the dailies, well, what we actually have here is we had this retest up here. We have had a confirmed break below, close below, and then we've had sideways movement for the past 4 or 5 days. 1, 2, 3, 4, yeah, 3, 4 days here. As we drop down to the 240, then we have this setting up. So we've got a swing in the market, we have a directional move, and then we have the market adhering to this trend line. Now typically within these low and tight flags, you will see rotation patterns because these low and tight flags form a channel. There's the fourth touch, and these channels we get lots and lots of double tops, double bottoms, head and shoulders, things like that. And right here you have a little bit more confirmation because there was another double top, just a sign that this could be a low and tight flag. Now I can only take these when we're in trend or we've just violated a major level of structure, and what I really like about this is this right here. So support, support, then resistance, resistance, and we will talk about our entry shortly, but this will be resistance. And we know overall that our bias is shorts, because if we go to the dailies and we put a structure level on just here and we look left, then this was a major level of resistance, and we've held that structure level. So like I said, I can only take low and tight flags if we violate a major level of structure. Well, we've held that major level and then we've violated to the downside, so this would be a valid opportunity for me. Now what I really like about this as well is we've come into the outside return, and I do talk about this quite a bit with these low and tight flags, is that sometimes we can have them where there's the pole, this is the low and tight flag, but it never actually comes into the outside return. So this is the outside return low, it's just here, we never come up to it. I much prefer it when we do come into the outside return, because it actually gives us a resistance level just like this. So the entry is very simple. As per the rules, we need to see structure held and a red candle, and since our projection is lower anyway based on this head and shoulders, so for anybody that's new just joining us, there's the left shoulder, there's the head, there's the right shoulder, and as a minimum we can look for an AB equals CD pattern, Yeah, we've got room to go low, depending how you draw out your AB equals CD pattern. Could be down to here. I do think price is going to come down to this level. Targets for the low and tight flag for me is the 127 inversion, just there. So that actually comes in at this structure level just here. And bigger picture, if we zoom out, we do have this ascending trend line where we can see price come down a little bit further as well. So everything's still indicating bearish here. Because this is on the higher time frame, on the 240 on the Euro Aussie, you could drop down to maybe the 60 and you could look for a rotation pattern. Now here on the 60, the only thing that is looking like it's setting up is a head and shoulders. So that would be the left shoulder, this would be the head, and the problem you have here is that you either need an initial structure low, so a violation between this level, or you're going to need a pullback to the wicks of the left shoulder and then a lower time frame rotation pattern like that. And probably by the time that sets up, you'll probably have your red candle on the 240. So it's a case of just waiting here. We have to wait for the 10 o'clock candle to close, and then we need to wait for the next candle to show it red, because I doubt that this is going to turn red by the next 15 minutes or so. So it's probably going to be 2 o'clock before we even look at getting an entry here. So plenty of time to get your orders ready and to monitor the trade. Any questions on the Euro Aussie? We will, if we get the entry down here. Stops going ATR above the left shoulder. Scrap that, it won't be an ATR. We have the psychological number 16400, so 20 pips above that level should do it. Maybe a little bit more. Want to be 20 pips above you. Okay, so 164.30s, so we'd be looking something like this for the risk, and for the reward we would be looking at that. And on these higher time frame trades, you're less likely to miss your entry. You're more likely to get a better reward to risk because it is on the higher time frame. And this is the perk of working the higher time frame compared to the lower time frame, is you get a lovely 1, 2, 3 to 1 reward to risk. Whereas on the lower time frame, particularly say the 5 or 15 minute, you're not going to have as good a risk to reward. You may get an entry a little bit down here because you're not actively always by your charts looking at these. And so perks of working the higher time frame, if you only worked those, would you earn more pips? That would be something for your backtesting to determine. Or would you earn more pips taking more trades but a worse reward to risk on the lower time frame? So something that needs checking. I'm just going to be waiting to see if it does give us any type of double top, head and shoulders, or that red candle. So that's what I am looking at. Oh, good grief, come on. There we go. Any questions on the Euro Aussie? If there is not, I will move it off to the side, and I will bring over the Euro Yen, which really hasn't changed since we looked at it yesterday. I'm still waiting for the retest up in this zone just here to give us some sort of double top, and we will look at getting involved with a potential triangle as long as we do not test the closes of these candles. If we did, we could be looking at a low and tight flag instead of a triangle. But you can see the market is just waiting for some form of breakouts, probably waiting for a tweet. Let's go to the 60. 60, nothing here. Nope. Nothing. So this is a good few hours away. This is the 4-hour chart right now, so it could even be tomorrow, this, or even the day after, some point this week. I'll move the Euro Yen out of the way, guys, and really, unless you have anything out there, this is going to be another very quick session, guys. The charts just haven't moved since yesterday. I will bring over the pound New Zealand, and we did talk about the back pattern and the channel. I'll delete this off and do the high time frame analysis because it's very, very choppy, this pair. But you can see now we're starting to see the pound New Zealand move. We're starting to see it go higher. So drawing out the trend, move lower, a pullback, move lower, a pullback, a move lower, and then we retested down here, double bottomed, had a break above, close above, pull back for a 26.18, and now we are working our way higher. So this double bottom, though, if we put a structure level on just here, did not occur at our lows, which were down here. So this was not a retest or even a 26.18 that I was interested in, even though it does look as though we are going higher now. So let's drop down to the 240, and we have this first of all. So we have the channel. We draw it out based on the closes of the candles. Now it isn't the best channel now because we've had 1, 2, 3, we have had our 4 touches, but at this point here we failed to come lower, and test the channel, which is a real shame. But nevertheless, you can see at this upper level here we are adhering to this upper trend line, and if we throw some fibs on from our swing high to swing low, you can see right in the middle here we do hit a 50%. So that gives us X to A to B, B to C, and a CD completion up at the 886. So that actually came in at the 9,000 psychological number. I was monitoring that to see if it would give any sort of entry. It didn't. And what we have failed to do just yet is actually come up and retest this trend line. So what we can also do is highlight the wicks from the X leg just there, and you can see we've just come into the wicks now, but if we come into the trend line as well, well then I'll be dropping one time frame lower, which will be the 60, and I will be looking for an entry. To get short. So a rotation pattern up here. Any sort of double top, head and shoulders, something like that, and targets for me are going to be the 382 from the swing low to the swing high. And I think there was around 100 odd pips up for grabs here. So if you got your entry right now, well, a lot more actually, because we're pushing higher. The higher we go, obviously the better reward to risk we're going to have. 170-ish pips, something like that. Unfortunately, we're not setting up to to give us any type of double top here. For me, I like big rallies and then to run out of steam, give us that double top and then rally the other way. And instead we went higher, pulled back, and now we're pushing higher. So may not give us a double top, it may give us a head and shoulders. We may have to just wait for confirmation and see what actually happens here. So I am monitoring that as well throughout today. This could very easily come off today and give us some sort of entry. Is anybody looking at anything on the pound New Zealand? It's the only thing I've got. I will move it out the way for the time being. What currency pair to do next, guys? We may as well go over the pound dollar. I've still got some workings out from last time. We had 2 double tops, if you remember, guys. A double top here which produced a 26.18 and rallied down to targets. Another double top which actually failed. Actually, no, it didn't. There we go. So we spoke about this last time, about this 26.18. You can see price actually came down. Okay, this would not have been valid for me, guys. So just before I delete it off, let's have a look at what price did here. So the red is our risk, the green was our target ones, and the green was this level of structure just here that I've drawn out, this level here. So as we moved price down, we did not hit the 61.8 and we moved it down to here. It would actually have to come down to here. So then the market pulled back for 61.8, but it's already come into the zone where I would have taken first targets. So for me personally, we'd hit targets before we'd pull back for the 61.8 fib. So that was not a valid opportunity for me. I don't trade 2618s just by themselves anyway, but in that situation we'd already reached our destination, so that's when the 2618 becomes invalid. And as you can see now, what we've done is we came lower, pulled back, came lower, gone higher, and just like a lot of the currency pairs out there, it's just bouncing to and forth. We will do the higher time frame analysis on this one though, guys. Still looking short. Still looking short here because we had a move lower, a pullback, a move lower, a pullback. As we drop down to the 240, we do have a slightly different story on the 240. This is how the trend looks. And then we had a move lower, then we had a pullback, then a move lower. So here on the 240, the outside return is here, but what this is missing is, even though we are moving in a trend, we're missing that lovely fluid trend-like movement. Instead, it's just very, very choppy. Okay, it's this type of movement, and these are lower probability for me, and when it's lower probability, your entry needs to be of a higher probability. So something like a rotation pattern up here within the wicks, a rotation pattern up here would mean you would have a relatively small amount of risk for a relatively high amount of reward. And if you get something like a double top that's confirmed, well then that gives you a higher probability because it is a rotation pattern. But nothing really. We do have an ascending trend line down here. If you guys can see it, we draw it on the closes of the candles like that, and just consolidation here. So higher low, higher low, higher low, higher low, indication that we are still pushing higher. So just consolidation. Bigger picture is bearish. Here on the 240 we're putting in higher lows, and we could see a move higher. On the 60 you could be setting up for X to A to B, B to C, CD completion around this level, giving you a very shallow Gartley pattern if it's valid for you. On the 15 nothing, absolutely nothing at all. This entire area is just junk, just junk. Check out the 5. Nothing here either. The market is waiting, in my opinion, for some form of breakout. Any questions on the pound dollar? Going to be a very quick session, guys. I wish I had some more to talk about, some good trading opportunities, but we may get one out of the Euro Aussie, and maybe some point this week the Euro Yen. Dollar Yen, we spoke about this potential breakout pattern. It is not valid for me because we're bearish and this pattern is bullish. But what we did speak about last time was this double top, and just to repeat things, double bottom, double bottom. When we're in a channel, we tend to see these rotation patterns, and you can bounce from one side to the other. and up here this double top produced a 26.18. So you would have sold the 61.8 fib there, and I said that you could then play for targets down to this lower trend line. You may or may not have had an inverted reward to risk, but either way that went on to hit targets. Whether or not we break out bullish or bearish here, I don't know. The overall trend is bearish, but this is a bullish breakout pattern. So just indecision everywhere. Here on the dailies, structure level on at our very lows. So we've got this key level, and as you can see we have failed to come down to that zone on the 240. We had a move lower, pullback, a move lower, pullback, move lower, and you may see a head and shoulders here. It won't be one for me because we did not come down to our structure lows. Or you could see it break out with the breakout pattern, or you could see the continuation to the downside. I do not have a bias on this currency pair. There's the 60 down to the 15. Nothing at all here for me, guys. So what else do we have? There's nothing on the Aussie dollar CAD. There is zilch on the Aussie dollar. Here's the Aussie dollar, guys. Still just moving sideways. Just moving sideways. Let's get rid of that. Aussie dollar CAD. This is the 240 time frame. Just nothing. Just junk. You may have a pattern on the lower time frame. May have a cipher pattern maybe. Comes to something when I've got to revert to bat ciphers and cartilage to look for some opportunities. So you do have a cipher here. You've got X to A to B, B to C, CD completion just down here. 786 is the completion of the cipher, and you've just tapped the entry down. I don't trade these, so if you was to get involved now, there'd be 15 pips of reward and your risk would be all the way down here at 27. So what you could do though is wait for price to come down to the lower level just here and drop one time frame lower, so that would be down to the 15, and look for a rotation pattern. That would then make your risk something like this, maybe 11 pips, and your reward would be around 23. I have nothing else on the Aussie dollar CAD. There is only the cipher. Move that one off out the way. Okay, we're 10 o'clock, so let's just have a quick look at the Euro Aussie. Did we hold structure? Just give me a yes or a no, guys, if we held structure or not. Yes, we did. So we've come into this zone now. The 4 hours held at 2 o'clock when we have the next candle. If it's red, I will be shorting the market. We can drop down the time frames as mentioned. Here on the 60, we have also held structure. So we may get that head and shoulders. It's not going to be pretty, but it's come from our structure lows up to our structure highs, and it would be a valid rotation pattern if we got it. Let's go take a look at the 15. Excuse me. for those of you that were interested, X to A to B, B to C, CD completion, you had a very deep Gartley pattern up here. With these Gartley patterns, my stop I always have at the 113.5, and that would have stopped me from being stopped out of this trade. You could still use this as the entry if you wanted to get involved. Now targets have not been hit, so if you was using that as the entry, it would be a lower probability trade because you're not waiting for the higher time frame confirmation, but that would be your risk, and your reward would be the same, down at that 127 fib, down at this level 162.34s. So you had a deep Gartley pattern there, which you can still use as the entry if you want to be a little bit more aggressive. I'm personally on quite a big losing streak, and I'm going to wait for the red candle. So there's still a good, I hope we don't get a very big red candle here. Yeah, 150 pips up for reward there, so that would be a nice win. And we know that these low and tight flags, if we follow the rules, they have something like a 65, sometimes 70% win rate, something like that. So they are very high probability trades. Marcus, is this going to be a setup for you? I know Marcus likes his breakout patterns, particularly low and high and tight flags. I particularly like this one because we're coming off a major level of structure and we have head and shoulders which has not hit targets. This could also be one where you play for an extension because we do have the possibility of coming a lot lower here. The question is with these breakout patterns, a lot of the time we hit the 127 turn. Now this will be a classic setup where the middle of the breakout pattern, if we see a return to it and it gives us a short, I will short first targets here. How much would that be? Okay, that'd be 240 pips. And then you could actually hold for second targets at this trend line. With it being a 240 pip trade though, I'd probably just take one target, and we're relatively close here to second targets anyway, so there could be two trades in one here. So I will be taking targets of the 127, waiting for the pullback, and then playing for the short to complete this head and shoulders down at this structure level. Marcus likes it. He likes it. So plenty of opportunities, we just have to wait. We'll get rid of the Euro Aussie again. Okay, what else do we have? Take a look at the New Zealand dollar shortly. Oh nice, pound Aussie has just hit targets. We've banked about 50 pips on that trade. I will run through the pound Aussie and talk about the absolute junk that is here. Just look at the state of that. That is just ugly, very, very ugly. But let's read the trend. Move lower, pull back, move lower, pull back, move lower. And then what we did really is we retested down here, but then up here at the outside return. The outside return is this level just here. We've held that level, and this is just consolidation, moving from one side to the other. If we go to the 240, we do have an ascending trend line, which is what I used as the entry. I took it from here. So we'd had multiple tests here actually. Yesterday it was looking like this, and in the last webinar I spoke about if we come down to this level again, you can look for an entry. Now we do actually have to readjust this so it's on the closes of the candles, so what it means now is that we've only got 3 touches here, but that doesn't really matter. We dropped down the time frames, and I think it was on the 5 I got my entry. Yeah, initially what I was looking at was the fact that we'd come into this zone, we'd come lower, we'd had just here, we'd physically closed above this level, so this gave us an initial structure high, so a potential rotation, And you can see we did the same thing back here. Moved down to this level, I pull back, then we came lower, and then up here we did the same thing, put in an initial structure high. We actually failed though to come back to complete a head and shoulders here, but on this one what we actually did is we pulled back to here and then we went higher. Now if we drop down to the 5 minute, we actually had a flag pattern, and this was one of the rare instances that I will use a breakout pattern for a continuation. So on the 5 there was a swing in the market just here. We had the move higher, and based on the closes of the candles, okay, it was like this yesterday evening. So we had 1 touch, 2, 3. Quite importantly, just here, the high of the wick did not come up to test the close of the candle. That's the confirmation that I need that the market is coiling and that we could see a breakout pattern. And we what did we do then? Okay, we came up, so the new close of the candle was here, 2, and that means then that we redraw out the trend line, because that's where the new close of the candle is. So 1, 2, 3, and the 4th test actually became here. And with that 4th test, we had a 3-bar reversal right there. And my rules are, anyway, that when we come down for the 4th test, I need a bullish candle, a green candle, and that just so happened to be a 3-bar reversal. And that's what I used as the entry. Put us through a little bit of pain. We went higher, came lower, so we retested. And we can either do the retest while we're in the channel, or we can do it once we've broken out. And I do say watch out for the retest many times. And from that point we rallied up to hit the 127 fib in the night, and which is just there. And we have now rallied up to hit our higher level. At least I think I've hit targets. It's on my other account, I'll have to check. I'm pretty sure we have to hit this level. So we've banked about 50 pips on that trade. I think really though, did everybody understand how I adjusted the trend line here though? Just give me a yes or a no. The trend line originally was like this. And again, if it was real time, guys, was like this. But why we adjusted the trend line? Because we'd physically closed higher, and that meant that we have to draw it out on the close of the candles like that, and that means then we have to duplicate the upper level and move it down. And as you can see, we still held structure, and this became the 4th touch. Yeah, okay, so a good example there of why you need to monitor the closes of the candles, and really why that rule works, because it gave you your optimum entry. And that's the reason why we do that. We draw it out on the closes of the candles. Other than that, guys, really don't have too much here. We could see a breakout to the upside. We may see a breakout to the downside. I really have no bias on it. Just this sideways junk, this sideways movement, it's just rubbish. Take a quick look at the 5 range though. Five range, nothing. You could look for a short here within the wicks, within that trend line. Whether or not we come down again for another test, it would be a lower probability trade for me personally, because we could see the breakout here. So I would really just wait on the pound Aussie. I'll move that one to the side, get rid of it. We will take a look at the New Zealand dollar. I think this is probably going to be the last trade to take a look at. So if you do have anything, let me know. Again, if you do work cipher patterns, well, you're coming back down to the 786, which would have been your entry originally. If not, wait for some sort of other entry there to get long. So, New Zealand dollar. What I liked about the New Zealand dollar was this, the fact that we'd broken to the downside and we could be pulling back for some sort of short. So let's do the high time frame on this one, starting off at the dailies as usual. So structure level on at our lows just here, and as we zoom in, because we've got this very large wick down here, it technically means that until we physically have a break below, close below of this level, we still haven't violated structure. If we go to the 240, here on the 240, you do actually now have a confirmed break below, close below this level. So if you don't need the dailies and you only need the 240 as your confirmation, well, you could look for a pullback and a chance to short the market. Is there any room to the downside? Let me just go back out to the dailies. Okay, I'm going to have to load some more data here. I have 1,000 candles loaded, which is 3 years, and you can see that we're now at 3-year lows. And as I load more data, we may be at more than 3-year lows. Let's load 3,000 candles, which will give us around 9 years. And you know that I don't like it when we make new lows or new highs, because if we've not done it for several years, we're in territory that hasn't been tested for a good while, and for me it's just a little bit more unpredictable. So anybody have anything on the New Zealand dollar? I think for the majority of the day it's going to be a lot like yesterday, unless there's a tweet that comes out from somebody, or there's something that makes the market move. Okay, so we do have some structure down here, guys, right here, right at this level. So if I move this down to the close of the candles, has price actually come down to that zone? Yes, it has. So we're actually trading now within the wicks of this internal structure level. Now when we get to structure levels that are quite close together like this, typically we come down to test the lower one, which would be this third trend line down here. So there is room for this to come a little lower, but we are at that structure level, aren't we? So not really a great deal of gain for me here. There could be a short, as I mentioned, on the lower time frame. What I'm just going to do is move this back to 1,000 candles, because it'll take forever to load 3,000. Okay, so this is the 240. You've had a big lower low, lower close candle. If we drop to the 60, we have right here put in a 3-bar reversal, and the red candle is a lower low, lower close, indicating we could see a bit of a bearish move here, and that's exactly what we're getting. But if you're looking at getting involved short, okay, that 3-bar reversal has actually occurred within the wicks here. Now it still may offer you an opportunity, because if you're reading this, then you had a move lower. Now this was not a triangle, but you've got this level of structure right here. So you've got an area that was tested twice, and so if we come back up to this zone, it could give you a shorting opportunity. If we drop down to the 15, that shorting opportunity could come in the form of a back pattern. X to A to B, B to C, CD completion right there. Could this be a flag pattern? Let's see. It could. I would be more inclined to say that the back pattern is the better entry. The reason being is because if you're looking for your four touches, 1, 2, 3, it's very likely that your fourth touch is going to be, yeah, just here. So, well, actually, you could end up with a flag or a back pattern, but then in terms of targets, guys, well, targets for me would be a retest of the lows just here, of the closes of the candles. So let's work out the reward to risk if you used the bat. So let me go back to the 15. So whenever I use it for trend continuation, these back patterns, I always go 113.5. You'll be surprised at how often that has saved me from being stopped out. Wow, that's only 11 pips. Okay, I'm going to make that bigger to the 127. So you'll be looking at about 13 pips of risk. Your reward, I'll make that red first of all so we can clearly see it. Your reward is going to be the closes of the candles based on the 60, which is going to be about this level. We'll make that one green. Down to here, 29, and extended targets. Yeah, I'd play for this lower trend line that we've already drawn out, which would be down here. So just scrunch this up a little bit. You can see that you've got a lovely reward to risk there, and if you do get second targets as well, they're going to be 53 pips down to that point. We are pushing lower at the moment, so don't forget you'll have to adjust your trend lines if it's going to be a flag pattern for you. We may end up, this flag I don't think may be valid because we may end up being too much at an angle, or not enough of an angle should I say. But either way, watch out for a potential flag, or if not, use the back pattern as the entry. It looks like a nice shorting opportunity if you believe the market can come a little bit lower. Good morning, Cody. Just saying today is very, very similar to yesterday. We're currently on the New Zealand dollar. There is a shorting opportunity using a bat or a flag pattern. I think the bat is probably going to be the correct one. Other than that, Cody, just Euro Aussie. We've got a head and shoulders, and we've got a potential low and tight flag. Got to wait for the next 4 hourly candle to close. That will be 2 o'clock GMT time. And I'm not too sure, do you still work cipher patterns, Cody? If you do, you've got one on the Aussie dollar CAD on the 60 minute. It's only a very small trade, but a lot of these currency pairs are just moving sideways. Any questions, guys, on the New Zealand dollar? If there is no questions, I will minimize that. Cody says, not so much, just use as confluence, don't take them on their own. Ralston, good morning to you. Good morning. Yeah, so really not a great deal, guys. I'm still long the Aussie dollar Swiss, up about 70 pips. Target on that is 230. Cody as well, pound New Zealand, just we have the trend line, we have a great big back pattern, and we're looking for a rotation pattern up in this zone. If we get one, there's around 170 pips up for grabs on the pound New Zealand. We'll just take a quick look at the New Zealand yen. I was looking for a short, some sort of breakout pattern, but it wasn't valid for me. If you just look at where price is, we're currently trading at a minimum of 3-year lows here. As we drop down the time frames to the 240, I was looking to see if there would be some sort of breakout pattern here. It wasn't quite valid for me. Need to draw this out based on the closes of the candles, and the reason it wasn't valid for me was because we had this little kink just here. If we didn't have that, then we could have made the case for a breakout pattern, even though I do think we're going to break out to the downside here. So what you can wait for on the New Zealand yen is some confirmation, because we've got this retest down here, and if we get a confirmed break below, close below, a pullback, you can look at shorting the market. We drop down to the 60. Certainly is a big boy. I'm really hoping on the Euro Aussie it's not going to be one of those trades where it just drops, the 4-hour candle just drops like 70 pips and we end up with just, you know, not a great reward to risk. So you can see New Zealand yen currently just starting to violate this level of structure right here. So this has been junk for a long time, and this was the lower level of structure just here, and you can see we violated it, pulled back, and now we're making our way lower. So this should be a relatively smooth rally down to this lower structure level, but bigger picture is I would wait for some sort of breakout here and a pullback. Look on the 15. I was also looking at a potential flag pattern here, guys. So we had swing in the market just here, directional move, and we were just starting to coil. You had 1, 2, 3, but just here we violated structure. We did actually come into previous structure, which was a good sign, but for this flag pattern just here we actually closed above the trend line, which invalidated it for me, which was a shame. Targets would have been the 127. So I have nothing else in the New Zealand yen. Does anybody have any currency pairs to look at before we wrap things up? Another quick session, guys, really isn't a great deal. So for me now, just on the New Zealand dollar, this is only going to be a back pattern. So we will see if we can get a return up to that point and get a short opportunity. Okay guys, if there is nothing else, well, thank you for joining me. I'll be monitoring those few currency pairs, as I say, so keep an eye on the Aussie dollar CAD, Cypher looking for a double bottom within the wicks. We're looking at 2 o'clock on the Euro Aussie for the big short on the low and tight flag. The Euro Yen, we're waiting for the triangle, or if we do get the breakout, it's a low and tight flag on the dailies and we're waiting for the pullback, so monitor that. Monitor the New Zealand dollar, which we've just gone over, looking for the back pattern entry short for the trend continuation. And we are monitoring the pound New Zealand, the back pattern within a channel. We're waiting to go up into the wicks and looking for that rotation pattern. And if we don't get any of them, well, we'll be sitting on our hands and waiting until tomorrow. Apart from that, guys, thank you for joining me again. I will see you within the chat or on the next webinar.